Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the Russian economy, and specifically to talk about the continued decline in the value of the Russian ruble. Now, if you've been following the channel, you'll know that I posted a few videos talking about the ruble recently. I posted one when it crossed the 94 to $1 level. I then posted a follow-up when it fell below 95. And in today's episode, I'm going to talk to you about the fact that it's now got beyond 97. And we are seeing a clear and consistent trend here for the ruble moving back to that 1 to 100 level that triggered a crisis in Russia back in the summer of 2023. President Putin came out and ordered the central bank to do something about it. The central bank started buying rubles in the market, and they also introduced a variety of restrictions that meant that companies in Russia were forced to convert any foreign currency that they had into rubles. And the reason I wanted to talk about it today is because we are seeing an ongoing cash flow crisis in Russia. Russia is still doing a lot of trade with countries like China and India, but unfortunately it's not being paid because the West have really tightened the sanctions since June 2024. And the tightening of those sanctions mean that Russia is now not being paid because Chinese and Indian institutions are having to check every single payment. They're looking at who the shareholders are of companies to make sure that nobody is on the sanction list, because if somebody is on the sanction list, those banks and financial institutions run the risk of being hit with secondary sanctions, and that would close down 98% of their operations. And of course, cash flow is absolutely critical. As I've said before, cash is king. And one of the reasons that we know that there's a cash flow crisis going on in Russia right now is that they recently announced that they're doing a trade deal with Pakistan whereby they're being paid in potatoes, oranges and rice. And apologies for using these props again, but I enjoyed it so much in the previous video that I wanted to bring them back out, and hopefully you'll enjoy seeing these guys again. But in all seriousness, when you're a country and you're doing deals where you're getting paid in fruit and vegetables, that tells you that there are problems with regards to cash flow. And if those cash flow problems continue, that's going to cause a major crisis in the Russian economy, because Russia still needs to import a huge quantity of goods. And in order to pay for the vast majority of those goods, they're going to need cash. Not many countries are going to accept potatoes as payment in order to do trade with Russia. So in today's video, we'll take a look at what's happening with the latest exchange rates between the US dollar, the Chinese yuan and the Indian rupee, because I'm aware that Russia is doing a lot more of its trade now in yuan and rupees than it is in dollars. We'll talk about the implications of the continued decline in the value of the ruble for the Russian economy. And then finally today, I'll wrap up with my summary. So what I think is happening right now, what's likely to happen over the course of the next 3 to 6 months, and what the implications of all of this are for Russia and its economy. But before we get started on all of that, I'd like to say quickly, thank you so much to everyone that's supporting the channel. If you're a long-term supporter, either through Patreon or Buy Me a Coffee membership or YouTube membership, thank you for that long-term support. It really means a lot to me. And if you've bought me a coffee or sent me a YouTube super thanks recently, thank you for the time and the effort and the generosity. This chart shows the movement in the exchange rate between the Russian ruble and the US dollar over the past 6 months. And the reason I've selected this period is that it really highlights that the ruble has been crashing in value since June, since the West introduced these tightened sanctions under which Chinese and financial institutions were warned that if they are found to be dealing with Russian counterparts who are on the sanctioned list, then they too will face the same sanctions. Russia has experienced a rapid fall in the value of the ruble. On June the 19th, one US dollar was trading for 83.5 Russian rubles. Today, it's trading for more than 97, which represents a fall in value over the past 3 months of more than 16%. And for a major currency, that is a complete collapse. And if we widen the scale of the chart to show what's been happening over the past 5 years, you can see that the current exchange rate is one of the worst in Russia's history. In fact, the only times that it's traded at this level were immediately following Russia's invasion of Ukraine, when the value of the ruble collapsed to around 125 to $1, and the other two times were in the summer of 2023, when the value actually fell to below 100, and that was when President Putin stepped in and told the Russian bank to sort things out. And over the last 12 months, the value recovered. However, it now looks like the Russian central bank is running out of cash. It's no longer able to keep supporting the value of the ruble in the international markets. And I think what's interesting about the fact that the Russian central bank is struggling to be able to support the value of the ruble is that the volume of rubles being traded has actually fallen significantly over the past 2.5 years. This chart shows the average daily volume of trades between the US dollar and the ruble for selected periods in 2024. So if we start off on the right-hand side of this chart, you can see that over the last 200 days, the average daily volume has been around 2,500 contracts, which is a very small number for two major currencies. However, as we've discussed before, since the invasion of Ukraine, most financial institutions in the West have stopped using the ruble, and most countries don't want to deal in rubles either. So the volume of trades has fallen significantly over the last 2.5 years. But even within 2024, we're continuing to see a fall in the volumes. And you can see that over the last 100 days, the average number of daily trades is around 1,400, which compares with an average of 2,500 contracts over the last 200 days. The number of daily trades has remained at around 1,400 for the last 50 days and the last 20 days. However, over the last 5 days, it's reduced again and is now sitting at around 1,300 contracts per day. So what this chart is telling us is that the volume of rubles being traded is reducing all the time. So you would think it would be relatively straightforward for the Russian central bank to keep managing the exchange rate, because it's a reducing amount of money that they would need to spend in the international markets to keep the price at the level that they want. However, the fact that the value of the ruble continues to decline tells us that the Russian central bank simply doesn't have enough money to be able to keep supporting the ruble, and that's why the value is falling. This chart shows the exchange rate between the Chinese yuan and the Russian ruble over the past 12 months, and clearly the Chinese yuan is now the most important currency from Russia's point of view, because Russia is selling around 30% of all of its exports directly to China, and it's sourcing around 40% of all of its imports. And all of that trade is being done in Chinese yuan because China refuses to deal in rubles. And what this chart shows is that the fall in the value of the ruble against the yuan is actually worse than it is against the US dollar. On June the 19th, which was the strongest period at any point in the last 12 months, one Chinese yuan was trading for 11.4 Russian rubles. Today it's trading for more than 13.7, which represents a fall in value of the ruble over the past 3 months of more than 19%. And as you can see from this chart, the current exchange rate is the worst that Russia has seen at any point in the last 12 months. And if we expand the scale of the chart to show the last 5 years, you can see that the current level is one of the worst in Russia's history. The only times that the ruble has been weaker were immediately following the invasion of Ukraine and the 2 points in the summer of 2023, which caused President Putin to tell the Russian central bank to sort things out. And just to round things off, this chart shows the exchange rate between the Russian ruble and the Indian rupee. And you can see that on June the 19th, the two currencies were actually trading at parity. They were at 1-to-1. However, over the past 3 months, there's been a significant decline in the value of the ruble, and one Indian rupee is now worth more than 1.15 Russian rubles. And the 5-year chart shows us that the current exchange rate against the Indian rupee is one of the worst in Russia's history. So why should Russia be concerned about the continued fall in the value of the ruble? Well, one of the answers to that question is because of its imports. Russia is still importing a lot of things. And when you're importing things like potatoes and oranges, you have to pay for them in a foreign currency. So let's take the example of this orange. Let's assume that this orange was priced at $1. Back on June the 19th, $1 was trading for 83.5 rubles. So if I was importing this into Russia and then selling it to Russian consumers, they would have to pay 83.5 rubles for it. If I'm importing this same orange today, it still costs me $1 to buy it in the international markets. But now I'm selling it to Russian consumers for 97 rubles. So they've seen a huge increase in the price of this orange, despite the fact that the orange hasn't changed. It's still a $1 orange, but it's no longer an 83.5 ruble orange, it's a 97 ruble orange. And that really tells you why inflation is going up so rapidly in Russia right now. The current rate of inflation is above 9%, and the Russian central bank is having a real problem bringing inflation back down because of the fact that the ruble is deteriorating in value. So the Russian central bank has introduced 7 consecutive interest rate increases from 7.5% to the current level of 19%. But despite that, inflation has gone up in every single one of the last 12 months. And it's because the price of these oranges and potatoes keep going up as the ruble goes down in value. So the fall in the value of the ruble is bad news if you're an importer, but potentially it could be good news if you're an exporter, because generally speaking, if the value of your currency goes down, it makes all of your products cheaper in the international markets. But the problem from Russia's point of view is that most of the things that it's selling in the international markets are commodities such as oil, coal and gas. And they're priced in other currencies. They're not generally priced in rubles. And as we've talked about before, China and India don't want to do any deals in rubles. So none of the contracts are actually being specified in rubles. So if those contracts are actually being specified in Chinese yuan and the value of your currency is going down, then it's not actually providing a great amount of benefit from Russia's point of view. The companies selling those commodities will earn more rubles when they convert the currency into rubles back in Russia. However, if they then have to make purchases in the international markets, they'd have to convert the rubles back into currency, and so they'd lose on that basis. But one of the other main benefits if you're a country whose currency is in decline is that it makes you attractive to tourists. And this is something that Turkey have benefited from. As the value of the Turkish lira has fallen, it's become cheaper to holiday in Turkey, and so each summer they see a huge influx of tourists who bring with them lots of foreign currency, and it's a really good thing for the Turkish economy. But the problem that Russia has is that Russia isn't really a massive holiday destination. And in fact, I don't think I'm going to go to Moscow for my holidays this year because of all of the things that are going on there. I'm not really that keen on getting on a flight. If I could find a flight, I'm not sure if I could. I'd probably have to go to China and then get a connecting flight to Moscow. But overall, I don't see Moscow or anywhere in Russia being hugely attractive to me at the moment. And so, despite the fact that the ruble has fallen in value, and so it would be cheaper to go on holiday to Russia, you get more value for your money, I don't think a lot of people are going to flock there because it's just not the sort of place that a lot of people want to go right now, given everything that's going on. So the fall in the value of the ruble isn't really benefiting Russia from a tourist perspective, but it is hurting the economy in terms of what's going on with its imports. So what's the summary and conclusion today? Well, I wanted to post this video because I think the movement in the value of the ruble is absolutely critical in terms of telling us what's going on in Russia right now. As we've discussed before, we've got a limited amount of data that's coming out from the Kremlin. They've reduced the amount of information that they're prepared to share. And so we get to see things like inflation and interest rates. But generally speaking, there's only really a monthly movement. Once that data is released, we don't really get any more information until the following month's information is published. But with the ruble, we can see things on a daily basis. This is a live exchange rate, and so we can check what's going on every single day. And that's one of the reasons why I've been posting videos on this, because it's really the only form of on-the-pulse reporting that I can give you. And what we've seen over the past 3 months is that the ruble has really started to deteriorate. From the high that was seen on the 19th of June of 83.5, it's now down to less than 97 against $1, and it is now pushing towards that critical 100 level. And it will be fascinating to see whether or not Russia has the resources to be able to support the ruble, to stop it falling below that 100 level like it did in the summer of 2023, or if Russia is simply so strapped for cash flow at the moment that it can't afford to do it. And I think what's been interesting in today's video is looking at the volumes of the exchange being traded, because they are down massively compared to what was happening before the invasion of Ukraine. Prior to the war starting, there would have been tens of thousands of contracts being traded every single day between the US dollar and the Russian ruble. Now it's down to around 1,300 per day, and it's declining on a rapid basis. But despite that, despite the fact that the market has shrunk significantly, the Russian central bank still isn't able to control the value. And that's because it doesn't have the resources to do it. It's focusing its efforts on other things like trying to bring down inflation. But as we discussed, inflation is actually linked to what's happening with the ruble, because as the ruble falls in value, imports become more expensive. Therefore, the prices on the shelves go up, and that drives up inflation. And that's actually quite hard for the Russian central bank to control, because they can't control what's going on with import prices. They could control what's happening with the value of the ruble, but clearly it isn't a number one priority at the moment. They're focusing their efforts on other things because the Russian economy is creaking. There are lots of things that are now getting out of control. And we've talked about this in plenty of other videos. But the main thing I think that's hurting Russia right now is the cash flow. It's still doing the deals. It's still putting millions of barrels of oil onto ships and sending them out to China and India and other destinations. But it isn't being paid for those deliveries because of what's going on with the secondary sanctions. The threat of being hit with secondary sanctions for all of those financial institutions is too great. Therefore, they're not releasing the payments back to Russia. And so Russia is gradually running out of cash. And I think the fall in the value of the ruble is showing us that there are real issues right now, because if it could afford to do it, the Russian central bank would definitely be keeping the exchange rate somewhere between 85 and 90 against the US dollar. It's now at 97, and it will be fascinating to see whether or not it gets to 100 at some point in the near future. If it does, then I will let you know as soon as that happens. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.